ask member countries to support us. The second bit was to look internally and say, what will it take for Zep-Re to deliver? And not just promises, to deliver. So we looked at what it takes. How do we build confidence within the markets? How do we build a strong balance sheet? How do we build the rating that is required to do this? And we've done that, right? We've come out as a very strong African institution, number 2 on the continent. We therefore had the confidence to be able to say, now we can provide some solutions. We have the strength. But most importantly was number 3 of saying, but we need to develop the skills and capabilities required to be able to be of service. So we still looked inside and said, what will it take to build resilience? What will it take to drive financial inclusion? And that's partly what brought us to have a department called Public Sector and Inclusive Solutions. Build skills, have actuaries bring in data, build technology. We have digital systems that are delivering this, whether it is under Drive or whether it is under ECA. We had to build internal capabilities. But soon enough, we realized we cannot do this alone. It is a tough battle. And our first call was regulators. So this year, we're proudly hosting the 8th Regulator Forum. So we've been at it for a long time. So we went back and said, regulators are our partners, right? We need to be able to create the right environment to be able to do the innovation that we are looking for. And one of the most interesting things that happened, for example, when we were doing Drive, and Commissioner Kiptum from Kenya is here, we went to him and said, under the insurance law in Kenya, to sell insurance, you must be an insurance agent, at least you must have a certain training that has gone through. We said, but this will not work for the pastoralists. They're not going to do COP or the insurance courses, right? And they said, so what are you going to do? We said, we have a Zep-Re Academy, we'll train them. We agreed we'll do 72 hours of relevant training to what is relevant to their field. And the regulator allowed us to do that. So we needed to get the regulators in the room. So every year we host, I think, fun, great forums that talk about what are the problems of the industry and what we need to do. For example, a big case that is coming up and that we are pushing back is to say, we talk about capacity, that we don't have capacity on the continent. That's why the business goes. But do you know why? We are totally fragmented. The insurance regulator in Zimbabwe talks about what is in Zimbabwe. And the company in Zambia cannot write a business in Zimbabwe. What happens after it's written in Zimbabwe? It goes out. It's an extraction economy. It's like the mining sector. Even in insurance, it's the same. So we are telling them, hey, what stops you allowing cross-border capacity taking? It's within your control. So we are pushing back. If the insurance companies in Rwanda cover the Bugesera airport and the capacity is finalized, can you allow the Ugandan companies to take the next risk? And the Kenyan companies, because after all, insurance is spreading of risks. So we are having those engagements. We are engaging governments. We are strongly engaging governments because this is a solution that takes that. And our governments are ready, right? They are ready. It is the right time. I mean, we're sitting in Rwanda because Rwanda is deliberate also. We're talking about this. And it's a country that has decided that it can be done. Yeah, and it might be the first time, but it can be done. And that's what we are saying. So when we say, where has it been done? We're like, it can be the first time. Let's do it. And conversation with Pichet about a year or so ago. And I've been scratching my head to convince bankers that they need to embed insurance in everything they do. And we sat down and she looked at me and said, I get it. I have some money from Mastercard Foundation. Happy to see you, Tsuko. We are going to embed, and we are doing that. We are supporting farmers today in Rwanda access credit through an insurance resolutioning, right? So we needed to talk to governments, to institutions, but to partners, the partners that have enabled us. We've talked about that. The AFD, sitting here somewhere, gave us money to support part of the regulator forum. We are co-funding the SACCO program in Rwanda with AFD. IFC is coming to help us move our agri-tech subsidiary, Africa, to a world-class institution. Who does it need? The World Bank is our support system in Drive and many others. So we pulled out partners, and partners love people that implement. So we had to make sure that we have solutions. So it's been a beautiful journey. It's very difficult, but it can be done, right? If we can all pull our needs and move from just boardrooms to getting this done. When we go to the field and you see a woman whose goats have been insured under this project has more money. There's research, by the way, that when there's insurance, even in the pastoral communities, children stay in school. It's as direct as that. Yeah, so that is what we're trying to do on a small scale. Indeed, we are a convener because we have that mandate. We are privileged because regulators are able to see that together we work together. We are privileged that countries give us trust in us. They own us, they're shareholders. And the assurance industry is willing to be partners because we are developing for the industry. And when we meet the regulators, we talk about industry problems. We never talk about Zep-Re problems, right? And that has also built that. So, the why is very, very clear. It's very obvious. The how is what we define every day, and it does take a village. But we've said that if you're not insured, then there's no financial inclusion without insurance. Yeah. Thank you.
Thank you very much, Hope. I think this panel has really exemplified that all solutions for African problems are actually in Africa. As you can see there's a lot of solutions around this room that we need to scale. We have time for 1 or 2 questions before we wrap up the panel. So if you're in the room and you have a question or a comment, kindly raise your hand and the team will bring you the mic. I see somebody at the back. The technical team can help us. Kindly introduce yourself, your name and your institution, and let's keep the comments and questions brief so that we can take as many as possible.
So thank you very much. My name is Stella Njunge. I'm the MD of NCB Insurance Company from Kenya. I'd like to direct my question to Commissioner Grace, particularly from a government and regulatory perspective. What is the case for shifting decisively towards proactive disaster risk financing mechanisms rather than relying on post-disaster budgetary allocations and emergency borrowing? And a follow-up question on that. In practical terms, what benefits have you seen for governments in terms of faster response, fiscal stability, and protection of development budgets? Thank you.
Thank you very much. Any second question? Let's take the questions at once in the interest of time. No other question? Oh, yes, sir.
My name is Rudolf Mavindu from Namibia. My question goes like this. If you look ahead 5 years, what would success in public asset protection and DRF look on national and at regional level? And what one reform or investment should government prioritize to achieve this success?
Can I maybe ask the second question be addressed to either Tom or Hope in the room? Any burning last one? No? Okay. So let me hand over to Dr. Grace. Can you address the question? And then I'll hand over to Tom.
Okay, so thank you very much. If I got you right, you said, what is the case for that shift? So government is now coming up with disaster risk financing strategy, and we need to ask ourselves why. So for me, what I'm seeing is this is no longer about humanitarian challenges, but governments are actually seeking out a structured approach to funding disasters because of the experiences that governments have had. And it's also a response, I think, to structured approach to also managing, the resources that are available to government. And, what we are seeing is, more increasingly government coming, whether to us as regulators, as partners, and also advisors to government. And the development partners also, I think they are pushing for that. Instead of just coming each time there's a disaster, we are looking for funding, why not take a structured approach? And that's why they are coming up, I think, with all these strategies. A genuine desire to have structure, I think, to funding, a genuine desire that I'm also seeing for governments to also plan the limited resources that they have. And I think you asked the question, so what has been the response? So in Zimbabwe, I can give you an example, because our government has also taken policies at the sovereign level with the Africa Risk Company. I think for almost 3 years now, the government has taken flood and drought policies. And in 2024, for instance, we also have what are called replica partners. They had, I guess, the motivation coming from the replica partners, where government will contribute 50% of the premium, and the replica partners will also contribute 50%. And I think in this instance for Zimbabwe, the replica partners have been the World Food Programme. The Swiss Development Agency has also come on board, with the 50% of the premium. And I think for as little as, if my memory serves me right, about 2.5 million in premium, we actually had a payout of about 31.8 million, after that 2024-25 drought. So clear evidence where you're seeing insurance working. And I think this is really what government want. In Zimbabwe, we call it V11s, is evidence that insurance is working. And that really started a process, because after that 31.8 million payout for $2.5 million premium, and I'm not saying that should always be the case, because I guess you'll not have any insurers. You also want good clients. But we all know for drought, floods, in Africa, that's very risky. But I believe that is a product that can also be priced appropriately to make it viable. But after 2024, we have found that our government is actually buying this policy every year now. And I want to believe that even without replica partners is the kind of policy that they will pay for, because they're actually seeing it working. And for the implementing agents, I think the World Food Programme comes in. It's the implementing agency. So when the premium is paid out, the World Food Programme actually goes out and does the distributions to all the vulnerable communities. So I think the response was very good. The payout was very good. The government is actually seeing the policy working. And my expectation is that I think going forward, we'll see government taking more and more policies, relevant policies, because they've seen evidence that insurance can work. And hence the discussions that we're having on the insurance of public assets, I'm convinced that the government will actually take up the insurance. And I think my message to our industry is that treat government like you treat any other client. The way you go out and you pitch, do that for government. You also need to prove the value add, you need to justify your pricing, and you need to demonstrate capacity. And I think we'll see governments actually taking this up. Thank you. I hope that's helpful.
Thank you very much. Over to you, Tom.
Okay. On the question from our brother from Namibia regarding public assets, I think it is fair to say that a good part or a significant part of the negative impact of some of the calamities that visit us are amplified or exaggerated by the poor state of some of our public assets, such as infrastructure. So we need, as stakeholders and insurers, for example, with long-term funds, whether it's pensions, development partners as well, government itself, we need to invest in this infrastructure for a decent return, that so that we are not just insuring them, we are also participating in improving the state of our infrastructure. But that needs to be for the cash flows from these projects, whether they are power projects, roads, bridges, and so on, that would help minimize the effect of the calamities. The cash flows from those can then give a decent return so that we are, in a sustainable way, improving our infrastructure. The idea is moving away from a reactive response to a prearranged, well thought out, risk-informed protection approach that then makes any response to any disaster, because they will come, a lot neater, quicker, and less damage than is currently the state. So the point I wanted to bring out is, over and above bringing the insurance expertise in pricing the insurance cover for this, which governments can use, we need to extend the PPP concept and actually also invest in the infrastructure that would help minimize the impact of these disasters. I don't know if you hope you have something else to say.
Yeah, thank you, Tom. So yeah, success looks like this for me. One is that our governments indeed move from strategies that we had to making sure that they have the solutions to support, because we know disasters are coming. That is, granted. And we have seen good stories. We've seen how the Morocco government, through the sovereign pool that they had, were able to respond to the earthquake in record time. So there is good examples. So I think for me that is number one. Number two is for development partners, bankers, MDBs, to make sure that they embed insurance, what we call shock resilient loans. If you're giving money to governments, please let's embed insurance for the long term, because we know that infrastructure is a backbone of an economy and it's something that needs to happen. So whether it's government, whether it's the funding partners, let's make sure that insurance is in there. The third one that is for the industry, success looks like this for me, that we can pool our capacities, that Africa can say we have capacity, right? That you can allow us regulators to write these risks at a regional, continental level. It is the only way we can be able to have the right capacity and to be able to serve our governments. So I believe many things have been said, but at the end of the day, the solutions indeed are in this room. And it is my hope, I always say my name is Hope, that we can do this, that we can do this. It's doable. Thank you very much.
Thank you very much, Hope. I think that's a beautiful way of concluding this panel. I think in the interest of time, we can conclude panel 1 so that we have time for panel 2. The key take home is there's a need for change, there's a need for scale, there's a need for these innovations to actually be relevant to our governments in terms of solutions. And all the solutions are in this room. So we really hope that you will take the time during this annual general meetings to connect and to reach out also to the Zep-Re team if you've been inspired by some of these solutions, so that we can bring these solutions to the ground. So I'd like to thank the panelists, and I know the team has a little gift for you, and kindly invite the Honorable Governor Soraya to join us on stage to also receive her token of appreciation. For the rest of the room, feel free to stand and stretch a little bit before we move to panel 2. Please don't leave the room, just stretch. Thank you.
We said, please don't leave the room. Can we all give a round of applause to the first panel, please? They've done an amazing job, the panelists. Thank you so much. Even Avi and Kipkorir, who've joined us online, we do appreciate you for being part of the panel discussion. We thank Pichette for the amazing moderation. Let's give Pichette a round of applause as well. This one is especially for the moderator as she gets ready to take us through the second panel as well. Thank you. Thank you so much. Thank you. Thank you. That brings us to the end of the first panel discussion. Kindly, let's resume our seats. All right, as we're setting up for the second panel discussion, please be reminded to sign up for the excursion that will be coming up in the afternoon, after lunch. Sign up is still ongoing. If you haven't registered for the excursion, please do so. We'll do it outside the room. As we're setting up for the second panel discussion, just be reminded that we will have our excursion of the city of Kigali at 2:50 p.m. Registration is still going on. If you haven't registered, please pass by the registration table and have your name captured so that you don't miss out on that. Also a reminder that tomorrow's session will be a closed one. Tomorrow's session will be a closed one. Those that are required to be present at that session are already aware of it. So just a reminder that tomorrow's session will be closed. And for this afternoon's excursion, there is need to register so that you help us with logistics. The logistics team needs to have all the names in. If you've not registered, please do so at the registration table. All right, we have a few seconds to get back to our seats before Pichette can take over and invite the second group for another panel discussion. All right, few seconds for us to resume our seats. Over to you, Pichette.
Thank you very much. Thank you, Jackie. Can we take our seats, please, for panel 2? Kindly take your seats. Can the protocol team invite everybody to come in? All right. Sheila, can you help us make sure everybody takes their seats? Wonderful. So are you ready for panel 2? Yes? Yes or yes? Yes. Okay. Very good news. So in panel 1, we talked about disaster risk financing. And panel 2, we're going to discuss insurance, inclusive insurance. And to do so, I'd like to invite my esteemed panelists to join me on the stage. Namakao Ntini, Registrar and CEO, Pensions and Insurance Authority of Zambia. Kindly join me to the panel. We have Madame Agnès Wanyirigira, who's the Chief Programs Officer of Access to Finance Rwanda. Kindly join us. We have Mary Porter Peshka, Division Director for Eastern Africa of IFC. Most welcome, Mary. We have Herbert Asimli, our Head of Financial Sector Development at the Ministry of Finance and Economic Planning of Rwanda. And we have Mr. Manuel Moses, CEO at TD. So for the interest of time, we're not going to go through their detailed bios, but I'm sure you have access to them. But I just wanted to tell you that this is the best panel we could have today. We have a fair representation from all corners. We have, the guys on the other side, in good Rwandan tradition, we have, ladies at the front. But we welcome everybody to the panel, and we're very excited to have you today. As we've seen from the previous panel, we still have a big issue of the penetration rate in sub-Saharan Africa. I think most of you know that insurance has a penetration rate in sub-Saharan Africa of less than 3%. Only South Africa stands out, but I think for the rest of us, there's an issue of relevance, as mentioned by Minister Yusuf Murangwa in the morning. On top of that, we have about 85% of our population that's under informal employment, and more than 50% are employed in agriculture. I think the example that Hope gave us about the pastoralist is very vivid in our mind and represents the reality that we have to face on a daily basis. But there's some good news. Microinsurance has increased by 70% over the past 3 years. We've seen mobile money becoming the top distribution channel. We've also seen a growing role for aggregators and microfinance institutions and cooperatives. So something is moving underground. But clearly, to close the protection gap, a lot needs to be moving and a lot faster. So there seems to be a mismatch between our product offering in the industry and the needs on the grounds of our community. So this panel is going to try to address this gap and see what is needed for us to have truly inclusive insurance solutions for communities. So the way to think about it is the first panel was more about the macro. What can we do for fiscal? What can we do for governments? How can we support resilience at the national and macro level? And the second panel is now looking down at the micro level of the underserved, the households, the businesses, at the most micro level of our community. So this is how the two panels fit together. And I'd like to start always with the regulators. I think we have seen a lot of regulators open up their doors to sandboxes, Namakao. And these sandboxes have allowed us to have pilots. But the question is, what can regulators do to push us beyond pilots and actually achieve scale? And what are some of the lessons that you've seen as a regulator in your own sandboxes that have prevented scale for our countries?
Thank you so much for the important question. I think it's a fair question, especially that a lot of people always think that regulators are the stumbling block. So I was
shy to say it.
So I really want to start by really saying that as regulators, and I really believe I'm speaking on behalf of my fellow regulators in the room, we are all aligned to the fact that we certainly have to embrace innovation and we can't merely react after the fact. So that's something that we are all aligned to. And why is it so? It's because we've seen a lot of development that has happened within the digital space. We have now seen AI-led underwriting. We've seen issues around cross-border payments, tokenized assets, and we've seen how we are all developing frameworks to deal with cyber resilience and fraud that comes with it. And so regulation can't merely be left to retrospection. We have to certainly be ahead of the game to support that. And so regulatory sandboxes, we see them as a very, very relevant strategic tool that we can certainly use for that. And it gives us an opportunity to incubate ideas. It's a safe space where you can, play around and try out new ideas and so on. So they are not just a compliance relaxation for startups as well as product innovation. We are seeing regulatory sandboxes as a space where you can really create opportunities for much deeper research because it helps you to really see what works and also to have some form of evidence generation. I think in the earlier conversation, we heard how it is so difficult to sometimes have, the real stories that work.
And so the regulatory sandbox really gives you that. And from a policy perspective, I think it does give a very good pitch from a policy perspective of how are we going to move these products, how are we going to move this innovation, beyond just the sandbox to something that can then work in the market. And we believe that way you'll be then creating the enabling environment for the market to innovate and play around and come up with the products that they are looking for. But I think the real challenge, and it comes to your question, the real challenge is what do we do beyond the sandbox? Because there's a time when the baby grows and they have to move out of the sandbox and play in the real world. So how do we then deal with that? So what we're seeing is that one of the challenges that we need to address is how do we then convert, the proof of concept into something that is commercially viable, into something that can be widely adopted as a solution to what we're trying to fix. And we believe that regulatory sandboxes are a valuable incubation tool, but it doesn't guarantee market success. And I think this is where we should all pay attention to. And as regulators, we are then tasked with creating that enabling environment. So I'll quickly speak to some of the issues that we have done in Zambia to really create that enabling environment. I must say that we just launched our regulatory sandbox for the insurance sector in Zambia, but we've had sandboxes for the banking sector, the capital markets, and we've seen the lessons that really have come out of that, things that perhaps should have been done better. And so really when you're the one that comes in at the end, I guess you learn all the lessons that the others have done. But I must be quick to mention that in the absence of the microinsurance regulations or inclusive insurance regulations that we now have, we had allowed the industry to pilot and learn. So we've had inclusive insurance products in the Zambian market for over 10 years. And the regulatory framework only came in last year. So it showed how, as a regulator, we were open to the fact that we can still support this innovation and ensure that we can then support the market to really scale up on their products and really deal with products that meet the expectation of the market. Another area that I want to speak to is really the missing link should not just be looked at from a regulatory point of view. I think we have to look at the entire, insurance ecosystem. Earlier on, we had in the conversation around issues of access to capital. I think many innovations really require capital in order for them to actually reach scale and go beyond the pilot stage. And insurtechs, most of them are struggling to find capital. They have the ideas of what they want to do, but many people probably don't trust them. I think earlier on, we had a conversation with the minister before we started this morning's session about how the informal sector is not supported even by the banking sector. So when they are looking for capital, so where do they go to? So we need to look at issues of how do insurtechs, how can they be supported to access this capital? And that's where the conversation of the private partnerships, public partnerships really coming to help to bridge what the insurtechs are looking for, because they have an interest, they have a commercial interest in it, but governments do have a socio-economic interest. And I must mention that most of our governments, leaning in on the conversation that we had of disaster risk financing, they do appropriate a lot of resources to dealing with these disasters, because whether they like it or not, if there's a flooding somewhere, they have to move in to help those people. So can those funds, in a structured way, be then channeled towards ensuring that we can incubate these innovations that can then help those vulnerable communities rather than dealing with it after the fact? So it's an issue that we can look at. Insurers also struggle, I believe, with balancing the proposition of giving back to their shareholders. Most shareholders, I must say, sometimes are not patient. Their capital is not patient capital. They want to get a dividend as quickly as possible. So insurers also need this support, and this is where we've seen that entities like Zep-Re have come in to give that support where they can work with the local insurers to build that capacity and sort of, rather than waiting for the cedants to really cede to them, they're then, looking at, can we have interventions where we can then downstream to the insurance markets to build that capacity so that they then give that support. Another issue I wanted to quickly speak to is availability of data. I think we've all had a lot of success stories, but really for you to get this data becomes a challenge. How can we ensure that we have data that we can then deal with? I think we all know that we are struggling in most of our jurisdiction to come up with data. And so even when you're looking at coming up with innovation, where do you start from? Where is your baseline? Because historical data in most of these jurisdiction is not available. And perhaps that's why there's a conversation, or if it's available, it's probably held by the banking sector. It's held by a lot of fragmentation. How can we ensure that this is coordinated? And I think the conversation around open finance becomes very relevant. I think it's a conversation we're all talking about. And are we able to create a more interoperable and trustworthy framework where we can then share this financial data? And as regulators, I believe that together with policymakers, we really have this convening power. And I can confirm that in Zambia, we've started the discussions around open finance being led by the central bank. And it's something that we believe can work so that we can be able to have a platform where we can share this data. Another missing link that we definitely need to deal with to ensure that these products go out of the sandbox to reach scale is really the distribution. I've often said that no matter how great a product is, it cannot reach scale if you don't look at distributing it at low cost, especially when you look at the low-income market. And so we've all seen, again, the success stories of embedded insurance. I think earlier on, the earlier conversation was there around embedded insurance. How can we use embedded insurance to be able to leverage that? And we do have the success stories. I can speak to Zambia. Last week, we just launched our FinScope survey for 2025. So the FinScope survey is basically a dipstick that we do into the financial sector just to test really how people have access to financial products and how they understand and the awareness around financial products. And the results are very, very impressive. So from 2020, we had an uptake of digital financial services of about 58%. And in 2025, we have recorded 76.5% uptake, which we believe is very impressive. And it then creates a very good conversation around how we can explore digital financial services to be able to upscale. Another issue that we must always remember at the heart of any product is really there's a customer. And when we talk about insurance, it's issues of trust and awareness. And I think if customers don't understand a product, no matter how good it is, no matter how commercially viable and technically sound it is, they won't just take it up. Or they'll take it up because it's part of an embedded solution they're looking for. And the next time you ask them to opt in, they just won't do that. And we've got a lot of stories around, I think, mobile insurance that have happened in that space. And so it's important that we then create that awareness. And in Zambia, we do have strategies around financial education that we've developed to ensure that people can then understand. And we believe that as regulators, as well as policymakers, we have to be very intentional. I must also mention to say that regulators have also shifted their focus, beyond prudential supervision to issues around market conduct. Can the products be more transparent? Can the products have a true value add? I think the Minister of Finance emphasized this earlier on, the issue of the value add. So these products, as we are taking them to market, is there really value that the customer is really finding out there? And so in summary, I would want to say the missing link has to be addressed, not just from regulation, but from the entire ecosystem. And I believe that all actors that are within that ecosystem really have to have an element. Thank you.
Thank you very much. Thank you very much. I think you've thrown a very clear challenge to the policymakers and what their role can be to support insurtech, microinsurance, and other innovations, as opposed to just responding to climate shocks. And I'd like to hand over to Herbert, since you're representing the Ministry of Finance, the core policy-making institution, to see how do you see the role of the government and of course, the Ministries of Finance and the government at large in addressing these issues?
Thank you very much, Pichet. I think I'm not going to go far away from the regulator because we work together. I mean, whatever she works on is going to come to me to understand it and be able to send it across to the legislators and defend it. But what she said is true and profound. We totally agree with thinking of adoptive regulations. The adoptive regulations, you will find them in the sandbox approach. We need to accept the fact that there's a lot that we don't know as regulators and policymakers, and then create that environment to learn with somebody, to learn with a brilliant mind and be able to deliver something to them. So that's why we need to work with the regulators and be able to deliver that. But another part that I wanted to touch was on also working with the regulators on ensuring that they are delivering or designing proportionate regulations. When you look at this space, the risk is not the same. And you can't design regulations that are the same. When you look at microinsurance products, their risks are different. You don't want to come up with regulations that are prohibitive. You don't want to prohibit before even somebody starts to design. So to us, appropriate regulations are very important to allow products that reach the last mile. The other part that I wanted to touch as a policymaker is the need for us to invest in what we call the digital public infrastructures. They're huge and expensive, but also the fact that we convene a lot of data from all the places. So we need this data to be in one place so that the insurers, the designers of products, and the innovators are able to fetch in that central place to design the products that suit SMEs, that suit my mother and uncle that is down there in the village, trying to make ends meet and be able to say that, yes, my house is secure. Even if a disaster comes, at least an insurance company in the market designed a disaster risk product for me and delivered it to me. Even if this house goes down, I'm going to be able to reconstruct. I'm just picking out an area that has been spoken here. When you look at, for example, the disasters that are happening in Kenya, in Rwanda, and all the places, homes are being washed away. But when you look at all these markets, what microinsurance DRF product is there to ensure that that person is able to rebuild very quickly? They are not there. So it's important that we build those digital public infrastructures to ensure that there's data for them to design products, but also to have clear legal and regulatory environment on data itself. Who consumes it and what do they use it for? It should be simple for people to access this data to design their products. Another part that I will touch on is also availing capital. Not finance itself, but also incentives. When you look at some of these products, they're expensive to design, but also to deliver. And most of these insurance companies might not have all that finance. We need that patient capital that was being spoken of here. I remember CEO Hope was talking about support they're getting from World Bank, MasterCard Foundation, and AFD. So I also want to mention that us as policymakers in Rwanda, we've been able to do the same. We work with FSD Africa, we work with Access to Finance Rwanda and say that, look, you really need to come out and support microinsurance. And we've seen this. We've seen Access to Finance Rwanda, which is one of the member of FSTP, Financial Depending Africa, to be able to help us design microinsurance regulations, but also help one of the insurance companies, which is Radiant, to be able to set up an independent microinsurance department that is now delivering these products on the market. So they need this capital, they need this finance to be able to do that. For now, I think, let me pause at that. Thank you.
Thank you. Thank you very much, Herbert, for giving us the policy framework for these solutions. I'd like to turn to you, Manuel, because ATD is a Pan-African organization that, for those of you that don't know, provides trade and investment insurance to unlock financing across the continent. I think traditionally, your institution has been known for providing credit risk insurance and guarantee support, and that has been focused mostly on small and medium enterprises' access to bank loans. Now we're discussing the underserved, which typically are outside the banking sector. Currently, they're not being served by the banking sector. And if we take the example of the farmers, their risk profile is increasing every year because they've been most affected by climate shocks and other shocks. So I'd like to hear from you as an institution that wants to stay relevant. What can ATD do and the likes of ATD, and how should we think about bringing these underserved segments closer to traditional financing solutions?
Thank you very much, and thank you for the kind introduction. I must also start by thanking Zep-Re for giving us the opportunity to talk about this and also talk about our organization, which is a creation of a lot of people in this room. I see Kenya Re is here. I see my director from the MOF is here. I see TDB. I see Africa Development Bank, Zep-Re, and others who have helped to create us. Why did these institutions gather to create this institution? They wanted to address the issue of financial inclusion. As we have correctly said, credit insurance is, you can say, a niche industry where we have basically targeted it towards banks because, as you know, we are all insurers in this room. We don't have the liquidity. We don't have the money to actually include those people that you're about to talk about. So we need to work with banks. So our model has been to try and sit between the banks and the SMEs. And of course, we can go down to the unserved later on. But that is a very difficult conversation. Let's say, for example, you've got this same disaster that has struck a country. It affects the government. We've heard in the first panel how the government needs to respond to that disaster. It also affects the SME, it also affects the farmer, it affects the small entrepreneur. The same disaster. How does this guy recover? This is where the Zep-Res and others are coming in to say, let us protect the asset itself, because that asset is the one that generates income, that generates the ability to pay the loan that the bank would have given to that SME. So without that connection of connecting the people in this room to banks, we cannot even encourage banks to lend to the unserved. So what you are doing under DRIVE and all these initiatives that the African Development Bank is developing is important, because that's the language that the banks will understand to say, how are you going to pay if there's a disaster? That's the first risk they want to measure. So the next risk that we will be covering ourselves is now, if the loan is not paid because there's a disaster, we can collect under the premium, under the insurance. But there are still other risks that make an entrepreneur, an agricultural person unable to pay. That is now credit insurance. So our hope and our model has been working. So with Zep-Re as a shareholder and also as a partner, we've been doing this with the SMEs, the bigger ones. And that has worked very well. They are our reinsurer, so is Africa Re. I hope they're in the room to de-risk the SMEs. I think there are many models out there. If I were my previous hat at IFC, would call them risk-sharing facilities, yeah? That's exactly credit insurance. Somebody has to sit between banks and these underserved. Otherwise, we're not dealing with this matter properly. And you must speak the language of banks. Yeah, what are those things that the banks will ask, and how can we convince them to bring the resources? So that's what we try and provide and say, it's not as risky as you think. These people actually have good businesses. So we will give you the cover, we will give you the insurance, yeah, so you can lend more to these small and medium micro enterprises. And that way you unlock the funding that is so desired to create the jobs that we all need. So just as an example of how we are doing it, it's working. The model that we worked with Zep-Re up to date was on a sort of pilot basis. So now we have figured out a way to scale it up. The way to scale it up is to basically agree on a criteria that banks might just look at and say, if SMEs are in the agricultural sector, they've got Zep-Re cover, they've got Britam cover for this and that, and they tick all those boxes, you can go ahead and lend money to them. So that's how we can bring scale to this sector. Indeed, credit insurance is not spoken a lot in a gathering like this. It's very intimidating for some of us to sit with many insurers, but the idea is they need to understand that we need you to join this effort of financial inclusion. Banks have done extremely well in financial inclusion, creating all these innovations that you have seen, in terms of raising deposits, getting people in account, but in access to finance, there is a problem that we need to all crack. Thank you.
Thank you very much. Let me move to Mary. I think Manuel and many other speakers have mentioned the work of IFC in this space, and I think Hope was very generous in her words in terms of the strategic partnership that is between Zep-Re and IFC. Today, when we think about integrating insurance solutions, into broader financial inclusion initiatives, what do you see is the role of partners such as IFC, global partners for the people in the room? And if you can touch a little bit on cross-border initiatives, because I think as we think about our communities, they're not only limited to the borders. A lot of our communities and SMEs also have cross-border transactions. So how does this conversation affect them or bring solution to them?
Working, okay. So I think DFIs like IFC share the same DNA as Zep-Re, right? We're commercially inclined, but we have a development mission at our core. And I think that puts us in a privileged place because we have capital, we have technical assistance, we have connections to government, to regulators, to policymakers. And in our experience, you need to pull all those levers if you really want to affect change. And I think if we want to increasingly integrate insurance into financial inclusion efforts within a country or across borders, we have to focus on a few things. And some of this is going to be repetitive from what you've heard across the panel. We have to first build market foundations. Integration needs strong infrastructure. It needs reliable data, as we've heard in both panels. It needs digital platforms. It needs products that connect insurance to wider services. So for example, something that IFC's done with Zep-Re's AgTech subsidiary, Acre Africa, is help them move beyond traditional policies to link farmers directly to seeds, to markets, to finance. I think the other thing we need to do if we want to get scale, we have to share risk. And that leads me to something else IFC is doing with Zep-Re. I mean, we're using our balance sheet to give them room to grow. Right now with them, we are doing this pilot of a reinsurance credit risk guarantee, which I understand is the first of its kind in Africa, to unlock more high-quality reinsurance in priority sectors across the region. And yes, it's a pilot, but we have huge aspirations. We think it's going to help grow the insurance market. We think it's going to lead to increased resilience of the insurance market, and we hope it's going to close the protection gap, you know, in Africa. And then I'd say a third thing that's important is we've really focused on bundling insurance with services that people already use. So instead of asking clients to buy insurance separately, we build it into bank loans, into mobile money, or into agricultural supply chains. A number of occasions we've collaborated with Zep-Re to embed insurance and products that specifically target groups that aren't included, whether we're talking about small women-owned SMEs, entrepreneurs, or farmers. So I really think what IFC's done to date with Zep-Re is kind of embodies the importance of partnership. We've also, alongside the World Bank, been a part of, and I won't talk about it because everybody has, the DRIVE project, which you know is spanning boundaries. But I'll stop there.
Thank you very much. You spoke about bundled products, and I just want to shift to Agnes. In Rwanda, since Access to Finance Rwanda focuses mainly predominantly on the Rwandan market, we've not seen a lot of insurance product being bundled into other financial products. And I know AFR has driven a lot of innovation in the financial sector, in the pension area, in agriculture insurance area. What do you think is needed to be able to have these bundled products which would help insurance come into mainstream of financial services such as banking, MFIs, SACCOs, and so on? Like, what are the critical system enablers that are required for this to happen?
Thank you, Pichette, for an important question. Indeed, bundling is still new. We have seen some pilots, mobile network operators working with insurance company, we've seen fintech coming in, but we are really still at the pilot stage. So how do we scale? I will look at this from a market perspective, a market system perspective, looking at demand, supply, and enabling environment. Having like my inclusive hat on, I will start, I think the key enabler will be customer centricity. Sounds like I'm flipping the question, but we need to ask, who are we embedding for? Whose resilience are we really championing? So starting from that point is before we embed, let's understand our customers. Let's know the risk profile. Let's segment them. Let's know what is keeping them awake at night. Do we know who they trust? Do we know their risk profiles? Do we know their cash flows? Do we know the challenge they have when it comes in, when they can afford? That will allow us to design for them, and hopefully outside the boardroom for insurance companies in the room. Let's design for them and with them, if possible. Once we have nailed that, then we will move on to embedding. What do we embed with? What is appropriate to embed for MSMEs? What is important to embed for like farmers? How do I reach small-scale farmers? How do I reach young women-owned SMEs in the rural area? How do I embed for all the underserved and even unserved? How do I bring them in a fold? How do I meet them where they are? But to meet them where they are, you need now to understand them. You need to know them first. So I really think it's fundamental to start from that, and then we move to embedding. Because embedding can be a game changer, but it has to have customer centricity at the heart. Now moving, another key enabler I would think is embedding is a partnership. Like any partnership, we need to align. We need to align goals. We need to align incentive. And our incentive and goal shift. And we have seen in some of the initiatives we had where we are supporting embedded products at the start, insurance company and partners, we aligned, but incentive will shift. So we need to be intentional to realign as we move along. A third enabler, I'll say, I think Herbert mentioned it and many people, is enhancing data infrastructure. As Access to Finance Rwanda, we are privileged to support the ecosystem currently on leading the digital public infrastructure agenda. And we hope that will really drive embedding, integration. It's not just integrating insurance within the broader financial system, but it's also how do we integrate with data infrastructure. So imagine like a digital centralized insurance infrastructure, which hooks into our new digital ID system. That's in a minute, we are verifying eKYC. Now we integrate with a payment system. That's very seamless. Premium collection, claims, disbursement. And then we should also like think about farmers. Let's say we want to embed with farmers. There's agriculture management information system being developed. There's satellite data someone mentioned in the previous panel. So there's a lot to move, but we need not to sit. It's not embedding to embed. Yes, embedding is a game changer, but who are we embedding for? Are we keeping that customer at the heart of what we do? That would be.
Thank you very much. Thanks for the very strong reminder. I'd like to go around and have a surprise question for each and every one of you. And change gears a little bit. Maybe starting with you, CEO Namakau. What is the one thing you think needs to change for regulators to make inclusivity possible? And maybe as a preview, I'll ask each and every one of you to think of one thing that we need to change for your respective sectors. Because I find very often we tend to think of things others should change. So when we look at ourselves, what is the one thing you would like your fellow regulators to change to make inclusivity possible?
Thank you so much. I think as regulators, we need to be more agile. We need to be more agile. I know we operate within a rigid framework. We have to operate within the rules. But yeah, we need to be more agile. And I believe the journey has started. I think we are found in conversations that ordinarily you wouldn't find us. We know we are in discussions. We are leading a lot of development issues that are happening within our jurisdiction. And so, yes, regulators need to be more agile and agile and agile. And I believe that the journey has started. Thank you.
Thank you. I'm sure 100% of the insurers in the room would agree. As a formally regulated entity, we always appreciate regulators being agile. Let me go to Herbert. What is the one policy change that you think could move the needle in terms of inclusivity?
Yeah, thank you very much. I think, to me, it's the way we view insurers. We should start viewing insurers as people that are going to, write those premiums, but also pay claims, rather than looking at them from the angle of, no, these are just businessmen. They want to write that business and they're going to run away. And the same we should also do the same to the citizens. And what that calls for us is to really, really educate them, change their mindsets towards the way they view insurers, so that we are able to see the uptake we want from our citizens and drive the penetration from, the cry we are at of 2% and drive it to over 15%. I think that's very important for me. Thank you.
Thank you. Thank you very much. Manuel, from a provider of risk-sharing solutions, what do you think is the one thing we should change?
No, thank you. I think we talk a lot as credit insurers about the need to do more. So I think if I were to change ATD, is to actually say, scale up your credit insurance, go down to the riskier segments of the market, and be prepared to pay the school fees that comes with it. So really, that is a big, big change. So we are cautious. We want to protect the other side of the of the shareholders. And so maybe we should dedicate some amounts of our profits towards these initiatives. Otherwise, it will not happen. And I also want the people in this room, the insurers in this room, to also consider credit insurance as something that they should also be involved in, because there is enough capacity in this room to underwrite this type of risks. Of course, we can, give our lessons as multilaterals of how we've gone through that journey, but there has to be capacity coming from this room to underwrite SMEs, micro, small. We are having to go to London and all that. Why should we not get the insurance here in the room? That's the change I'm looking for.
Very powerful. Thank you. Mary, how should the role of DFIs change broadly to support the ecosystem?
I don't know if it's change necessarily dramatically, and I don't know, I'm going to get in trouble for speaking for my own institution and other DFIs, but I do think, for example, IFC has a number of policies and standards like environmental, social, and governance that were written more than a decade ago, back when we didn't envision doing so much in the financial sector, let alone with insurers and reinsurers. And it's a miracle Hope is still my friend, because it took a while navigating that internally. And then I know you said we're not supposed to say what everybody else should do, but I do think DFIs like my own are heavily contingent upon context. So what happens on the policy front and the regulatory front, and having partners like Zep-Re that are willing to take a risk and innovate and get into the sandbox with us is super critical. So we need to do some in-house house cleaning, but we also need all these levers I referred to continue to be pulled and pushed.
Thank you. And then last but not least, Agnes, what is the one thing we think we should change collectively? I think you play a role of coordination in the Rwandan ecosystem, pulling all of us together. What's the one thing that you think could move the needle?
Well, thank you very much. One thing as an ecosystem, I believe I say it takes a village to raise a child. So it will take all of us, the whole insurance, a non-even insurance ecosystem, to really drive meaningful inclusion within insurance. So we need to partner.
Thank you, thank you, thank you. So we have a bit of time for a Q&A. If we have questions or comments in the audience, if we can, yes, I see a hand here. Lady, if we can know your name, what you do, and if you can keep the comment or the question short, it would be great.
Thank you so much. My name is Christabel Michel from Best Life Insurance, CEO of Best Life Insurance Zambia. I want to start by thanking the panel. It's been a very lively discussion. And allow me also to congratulate my regulator from Zambia on the increased uptake of insurance from the last FinScope survey. We just got the results, I think, last week on Friday. And insurance penetration has gone up significantly. So I just wanted her to just talk briefly on what the drivers for that increase are, just briefly. And if you allow me, my second question, I just wanted to find out from IFC and ATDI, why does inclusive insurance matter to your de-risking mandate, and how does it help unlock access to finance for the underserved SMEs? So if they could both maybe also make a comment on that. Thank you.
Thank you. Any other question, comments? Yes, gentleman on the left.
Thank you. I'm Chikakulamiti. I work for the Commercial Federation of Women in Business, one of the commercial institutions. I wish to congratulate Zep-Re and the panel for the insights. I work for an institution that is mainly focusing on the SMEs. 80% of them are into cross-border trade, and they don't have access to insurance. And what's very important is that there are issues that have come out, like embedding of the insurance as well as raising of awareness. I think there is indeed an opportunity for awareness raising. We are doing it, but I think it's not enough. Would be very excited to work with yourselves on this aspect so that we raise the awareness on the importance of insurance. Recently we had some inquiries from some of our members in Madagascar as well as in Malawi after they were hit by the cyclones. So we need really to be intentional about this. There is that willingness for uptake on the ground, but I think what's important is to create that awareness and also to upscale some of the best practices that you have already alluded to. Thank you.
Thank you. I think we can address that question to Manuel. Yes, thank you. Any last question? Yes, lady in front.
Thank you very much. And I'd like to, first of all, thank our colleagues from Zep-Re, Hope, the team. I do have a question to the panelists. I do agree that bundling products, services is important, but when we talk about micro entrepreneurs that actually struggle for access to finance and for whom they are actually about 80% of the population in the informal sector as micro, when we talk about bundling with insurance, what is actually that solution where we need to start so that we can really make a difference? And I did hear Agnes talk about data pools. Is there something that we can do really, country by country, continent as a continent, to actually make it possible for micro entrepreneurs to have access to insurance? Thank you.
Could you tell us your name and what you do?
My name is Etsuko Toda. I work for the MasterCard Foundation.
Okay.
Thank you.
Thank you very much. I think Agnes will take that question. Yes? All right, let me turn back to the panel and starting with you, CEO.
Thank you.
And we're curious about the numbers. Huh?
Thank you so much, CEO Ms. Michelle, for nudging me to speak a little about the results of the latest results of our FinScope. So yeah, we were sitting roughly at about 6% uptake of insurance in 2020. We are now sitting at about 10% in 2025. And it's really been a journey. We were quite intentional and structured around it because around about the early 2000s, we had, the usual structural, adjustment programs that are done, and what sort of intervention can you as a financial sector then bring in to ensure that you broaden access to financial services. And so we started the conversation around about, 2004 when government, came up with a project that was called the Financial Sector Development Plan with very, very clear milestones of what needs to be done. And one of the issues that we did in there is to develop the National Financial Development Plan that then speaks to how do we then ensure that we increase uptake in the banking sector, in the insurance sector, how do we deepen the capital markets? So there's a lot that's been going on, and we've had strategies such as the National Financial Inclusion Strategy, the National Strategy on Financial Education, with very, very clear initiatives, around creating awareness, issues around, bundled products, and how can we ensure that as people are getting this embedded insurance, they can then opt in to take up other insurance services. And we've seen that from the farmer community, those that are buying insurance as part of the farmer pack, they then look for funeral insurance because they then realize that it's not enough for me to take up this, I also need to have cover. And I think it's really the fruits of a lot of awareness that we have done. I think it's something that I always passionately talk about because I was part of the journey that started the conversation around financial education. I spearheaded a technical working group that then developed the first financial education strategy. We did a lot of benchmarking with other jurisdictions, but we haven't lost the momentum. I think when we started out, everybody felt we'd lose the momentum. So we don't have hallmark activities really to create awareness. around financial, literacy. And the results of this FinScope has actually shown how our awareness activities are bearing fruit, and where we need to direct effort, because we were largely around the urban area, and indeed the results speak for themselves in terms of uptake in the urban areas. And now we're challenging ourselves to go outside, the urban area, outside the capital city, and really get to the rural communities. And it's an area that we believe we've done so well. The Ministry of Finance has provided the leadership. I think they've really been on top of things in terms of really driving each sector to ensure that we do that. We also have seen an uptake as well in the, in non-traditional financial services, like really the capital markets. We know that the capital markets, you would find only institutional investors there, but now we're seeing a lot of individuals really interacting with the capital markets, and it's really all coming from the efforts that government has put in place. We do have a 10-year capital markets, master plan that is really to deepen and widen, our capital markets, move away from the vanilla kind of assets that you find in there. How can we then bring the non-traditional kind of assets within there? And I believe that this is really the impressive results that we are seeing from the figures. The numbers don't lie, they speak for themselves. So thank you so much.
Thank you very much, and congratulations. Let me move to Manuel. I think you have 2 questions.
Indeed, but part of it will be answered by Mary here.
We'll put her on the spot too, don't worry.
So thank you. I think you wanted to know, how does credit insurance respond? How does that policy actually respond, isn't it? So let me use an example of an SME, a micro SME that we want to have access to financing. So the entrepreneur would go to his bank or her bank and will be told, what if you die? Then they will say, I have your cover, life cover, to protect me if I die, because I want to provide you a loan. This is the discussion between the bank and the entrepreneur. Then they will say, okay, what if there's floods? If it's an agricultural entrepreneur, then they will say, I'm under drive. I'm covered by drive, okay? So the police will respond that. And then the last question the bank will ask that entrepreneur is that, what if your customers or your buyers are unable to pay? That is what we call credit insurance. So they have supplied goods, they've supplied services, and their buyer, for whatever reason, is unable to pay. It's a risk that banks are unwilling to take. And they say these small and medium enterprises and micro enterprises are very tricky. So I don't even want to touch. I tried. I don't even want to touch them anymore, because last time I tried, 9 out of 10 did not pay me. Okay? So we are now trying to say, all right, how can we encourage banks to get back into that sector? Yeah? So our policy then comes in and says, please go ahead, lend to these people in case there is a problem. These people are unable to pay. We shall pay you. So you are no longer facing the SME risk, but you are facing us. That is what we are calling credit insurance. And that's the gap that we're trying to fix. So really our customers will be, the battle would be with the banks, microfinance institutions, anyone who's providing credit and financing to these sectors. That's how credit insurance works. I'm sure the same thing for IFC, the same product. We need more of this stuff, so the more the better. So that's how credit insurance works. And my appeal is that even you, as an insurer, should also get interested, start to sandbox this, and we can work with you, all of you, and say, you should have a product around this, because we need more people to be really comfortable to credit insure their local institutions. Because really it's about here, Rwandese francs, Rwandese francs, Zambian kwacha, Zambian kwacha. So that is really the best solution. My appeal is we need all of these insurers in the room to actually take this up and say, there's something there. We are doing it, but we also want you to join us and learn about this asset class. Then there was another question from my brother Chikakula. I had not seen you. Good to see you in the crowd. Yes, the same thing for women. They are trading, they are doing cross-border trades, and they will want to know that if they supply their goods across the border, maybe those goods get damaged, get stolen, there should be a cover for that. Yeah? They'll get the traditional property and casualty cover that the people in this room can do. But there's also the fact that that cross-border buyer, say you are in Malawi and you are selling to a buyer in Zambia, that you have never seen. That is a very dangerous game for the lady or the entrepreneur. They also need to be protected. And ATID has protection for that, and we should discuss how we can. It's still credit insurance. There's a buyer and a seller, they don't know each other, and they need comfort. That's what we provide. Our hope is that the first time they trade, there is 100% credit insurance. The second time they trade, there's 80% credit insurance. The third time is we're reducing our involvement, and our definition of success, and I think someone asked in the previous panel, what will be success? Success will be that if these people can trade without credit insurance, without risk sharing, then we have succeeded because the market is now functioning. I hope I've answered.
Very clear. Thank you very much. Mary?
Well, Manuel did half the job, thank you. But I think one part of the question is why does it matter to my institution? And as I alluded to earlier in the panel, we have a development mandate, and inclusive development, inclusive growth is key to that. So I know we talked more about credit and more about savings, but insurance is super critical. I mean, think about it, one event, a climate catastrophe could wipe out an entrepreneur or worse, his or her entire family. So we see insurance serving as a safety net to sort of protect progress that's been made.
Thank you. Agnes?
Thank you.
How do you embed when you have nothing to embed onto?
Oh, yes. Tricky one. But again, we have to go back and get to know who are we embedding for and what do they need. Micro-entrepreneurs, as to put it, they are the majority of our MSMEs. But they need credit, they need savings, they need insurance. I think we need to see this from a holistic resilience and growth solutions, not just an insurance challenge, a credit challenge, or a saving challenge. We need to look holistically. They are not visible. If I take like a credit, if we are in parking isolation, for credit, we will go to any bankers, MFI, they will be lucky at the SACCO at least because they have that trusted relationship, but they don't have a history. So that's where data come in. How do we leverage alternative data? They may not have a bank account. They may have never used it. They have never borrowed, but they use Momo every day. They pay with Momo. So we can leverage those data, alternative data, to bring them in the fold, to make sure they are visible. And from that, by really data sharing, investing into infrastructure for data sharing, we will make them visible. And then we will see what type of credit they need, what type of finance they need, and for what. We will add on what really is the risk profile, what are the priority risks. Again, to repeat myself, what is keeping them awake at night, and then design for that. Savings is also a resilience tool. So it's really embedding that, and also acknowledging that not all micro-entrepreneurs are the same. We are those entrepreneurs in different sectors where we face, yes, some common challenges, but we need to be intentional on specifics. We need to be intentional on location where they are. Micro-entrepreneur in rural areas, they will have some specific challenge different to micro-entrepreneur in Kigali. Young women micro-entrepreneur will have different challenges. So we need to be intentional. I keep repeating, going back to customer centricity, but customer centricity data to make them visible, to assess the risk better, I think that would be a starting point. Thank you.
Thank you. Thank you very much, Agnes. I think we've seen in many countries through the FinScope study that financial inclusion is increasing very rapidly, actually, on the continent. But this is not being matched by insurance penetration. So even in Rwanda, we see financial inclusion has now reached 96%, but insurance penetration is less than 10%. So I think there's somewhere to hook on for the embedding All right, I think we've reached the end of our panel. I really want to thank the panelists. We've had a fascinating conversation about how to become more inclusive. I think some key messages around client centricity, the role of regulators and their evolving role as we look at inclusive insurance, the relevance of risk sharing, the policy angles, the policy changes that we need to take to support even insurtech and fintechs and other new solutions, and the role of DFIs in making all this possible. I think it's very clear that this is a very big task. None of us will be able to survive alone. We'll have to focus on partnerships, working together, and keeping the clients at the heart of the solutions that we are proposing. So let me thank the panelists. I think we have some gifts for the panelists. And for me, this will mark the end of the round table. And I'll hand over back to Jackie, who will take us for the next session. Thank you very much. Thank you. We'd like to invite the Vice Chair of the Board to kindly come and hand over the gifts to the panelists. Thank you, Simon.
If you haven't had the chance to come on stage and you're wondering, when will my gift be presented? You have it on your seat, eh? There's a gift hamper hanging. Yes, please. Pick that. Because you might not come on stage, but we definitely thought about you. You won't go back empty-handed. Let us appreciate the panelists as they exit the stage. The moderator for an amazing job that she's done. Those are such insightful conversations, very, very deep conversations. I managed to pick a few things over time throughout different sessions. I want to start with one that I think, to me, this is my humble opinion, is very important. One of our speakers said those that we are trying to serve, it wasn't necessarily on the panel, it wasn't the panel, but I will just highlight a few things that I have stuck with me since we started. Those we are trying to serve are not in the room, but the decisions taken will reach them. I would like to encourage you who's in the room to think of educating that person. We had it from Pichet, we had it from the speakers. The intake is low. And I want to attribute it to education. An insurance company will pay for an interview at a radio station or a TV station, or they'll have a Twitter space. But how often do you go down and have a face-to-face interaction with the people that you're trying to serve? I want to use a real-life example of people that I know who are in a relationship with a workplace. Somebody's employed, and so they have a health insurance. And when they have health insurance, there are those that will get stuck in that job for even 30 years because they do not want to let go of the health insurance. Then God forbid, something happens, COVID or a pandemic, whatever form, and they lose that job. You find that even if this person can afford to buy a policy, they will not. So you see, if they can afford it, why aren't they buying it? There's a gap there that somebody needs to fill. There's something that is missing, and we need to find it. And I think it all goes down to awareness. It's the lack of knowledge. So we need to find a way of doing that even better so that people don't see insurance as a ripoff. There are times when you have a conversation with someone about insurance, and the first thing they will highlight is some negative story from someone who never received their compensation. And that goes on and on and on. Every time you're trying to talk to someone about insurance, anytime you're trying to encourage someone. I sat with a friend who works for an insurance company here, and he's a big guy, a sales and marketing manager at an insurance. A friend of his has not bought insurance. You can imagine when you're a head of sales and marketing at an insurance company and your best friend doesn't have insurance. So this best friend of his bought a brand new car from the showroom, had it for about 3 months or so, and over the 3 months, every time you would meet him, he's trying to tell the guy, you're not for third party. Your car is not for third party. Buy comprehensive insurance. And this friend did not buy comprehensive insurance. One day, sadly, this story has a sad ending. Yeah, one day, unfortunately, got involved in an accident. He survived, thank God. His brand new, very expensive car that he had been driving for 3 months, hardly 3 months, did not survive. And at that point, you know, third party will not do much for such a person. So let us talk about these things. And when I mention third party, it's what a lot of people know. But how many people even know deeply about it? So let us not stop at just telling people things on the surface, but we should endeavor to go deeper, explain to someone that when we talk about third party, this is what it means. When you buy comprehensive insurance, this is what it means. Another guy in a village in Kenya, it's been raining heavily in Kenya the last few months. In fact, as we speak, yesterday, about 18 people or more lost their lives, 60,000 people displaced over heavy rains. But there's this man in a village whose cows and sheep and goats were struck. There was heavy rains at night. He lives next to a transformer, and then the transformer is struck by lightning, which in turn struck his cattle and his goats and sheep until today. It's been about 5 months now or so, 5 months thereabout, because it's been raining heavily on and off. But the guy has not been compensated yet. He doesn't know whether, of course, his animals were not insured, and the company that owns the transformer is not forthcoming. So today it's that guy, tomorrow it will be his neighbor. Let us make sure that we reach such people, create awareness, talk to the different people deeply, not on the surface. Educate governments and their citizens, and make insurance affordable. Africa is underinsured. The poor considered to be lowly or in the informal sector should be seen as an opportunity. One of our speakers said that there should be products that they can consume. Those products should be created for them. Then the governor of Rwanda, Central Bank Rwanda, said, Rwanda is positioning insurance as a key pillar for economic development. Can we have all our governments do that? There's also a need to invest in technology and the people that make it possible to innovate. Treat government like any other client. That's important. Go to government with solutions, not just problems. And then if you're not sure where to find the solutions, you look around the room. As Hope said earlier, the solutions are in this room. All right, before we quickly go into the next segment, I would love to point out a few things, just quick reminders, because I'd mentioned this earlier, that we have an excursion that's happening this afternoon. Would love you to sign up if you haven't done that yet. It will be going on during lunchtime. The pickup will be set for 2:50 p.m. Tomorrow's AGM is set to begin at 8 a.m. registration, so make sure you're at 4 Points by Sheraton by 8 a.m. We have a gala dinner. Pickups will be from Marriott Hotel this evening at 6 p.m. All right, thank you. Those are just a few reminders of things that we have to do for the rest of the day and tomorrow morning. I've shared what stuck with me throughout the sessions. I'm sure you also have a few things that you have written down. So as we said earlier, you don't leave the room as you came in. All right, we're now moving into a very important segment, and this segment speaks to collaboration, innovation, and partnerships, some of things that have featured in the two panel discussions and even in the speeches that have been made here. I would love to invite on stage our Managing Director and Group CEO, Hope Murera, and joining her on stage is Justin Naylor, CEO of I2. I'll invite our MD. MD, would you love to make some remarks before the signing? Sure? Good.
All protocols observed. This is a demonstration of some of the things we've been talking about, how partnerships is what has been building Zep-Re. And yeah, so happy to have I2 here with us. A warm welcome to Rwanda. So over the years, Africa's insurance markets have, of course, demonstrated resilience, innovation, and growth, yet we have all acknowledged the gap that remains. Ever too often, specialty insurance and emerging risks have required us to look beyond our borders for solutions. We have all talked about exporting premiums. And we believe at Zep-Re that this narrative must change. And today we are formally announcing a joint venture with I2 Specialty Risks. And this is a deliberate and strategic step towards building the change we want. Whereas I2 brings in deep technical expertise and a proven track record in underwriting specialty risks, Zep-Re brings its regional footprint, financial strength, development mandate, and convening power. What will this mean for us? It's critical that we retain premiums within the continent, and this is what we'll be working on to build local expertise and capacity, and making that our insurance partners, clients, have the skills to ride this business and retain it. Most of this business is profitable, but we have all believed that we don't have the capacity. We've actually been made to believe that there's no capacity, so we need to change that. So ladies and gentlemen, the future of Africa demands that we think boldly and act collaboratively. No single institution can do this on its own, and this is why we are launching this venture. So allow me to extend my sincere appreciation to I2 partners and invite Justin, the CEO of I2, to say something before we sign this partnership. Thank you.
Thank you very much, Hope. I'm going to stand up here. Just see if my slide. Okay, thank you very much. Members of government, regulators, Zep-Re board members and shareholders, and distinguished guests, it's an honor to speak to you here today in Rwanda. I'm going to do two things very quickly today. And the first thing, I'm going to take a few minutes to tell you very briefly a bit more about I2, and then I'm going to elaborate a bit more on this partnership that Hope spoke about. So first, let me start with I2. I2 is a specialty insurer that's privately owned. It was born in Johannesburg back in 2015. Our core brand message is think expert, think I2. We offer and underwrite over 30 different specialty lines of business, each product backed up by a dedicated team of experts who eat, sleep, and breathe just that product. Our vision is to be an epic partner in specialty insurance. And since we were formed 10 years ago, it's been an epic journey. We've grown our business 10x in just 10 years, and we've grown our team to 220 I2ers, as we call them. We offer our insurance products in about 12 different countries in Africa, ranging from our head office there in Johannesburg, up here to Nairobi and East Africa and Rwanda, soon to be Rwanda. We believe that the future of Africa is bright. We have a goal to be the #1 in specialty insurance in Africa. Now, we're not a tech company, but we are certainly investing heavily in our own systems and technology. So just a few examples. We've recently invested in and developed a digital platform to bring some of our specialty insurance products to SMEs, and we have the potential to distribute these across Africa. Earlier this year, I was very proud that I launched Africa's first AI insurance product. That was a big win for us and something really exciting that we're offering to this partnership. At I2, we have a saying that says culture eats strategy for breakfast. We look after our I2s first, and we know that if we look after them, they will look after you, our brokers and partners. We aim to be #1 at relationships, and in this partnership, that means cedants and reinsurance brokers here on the ground in Africa. We believe in local presence, eyeballs, and handshakes. We've built a loved insurance brand, and we've done this by doing many innovative and different things as a brand. Just 2 examples. We launched in COVID a webinar called iTuesday that still goes every single Tuesday at 10 o'clock in the morning. And this is now attended by over 1,000 brokers and partners every single week. Last year, we gave 1.3 million educational hours to the insurance industry. In March this year, we hosted our 3rd unconference, which was attended by over 600 brokers, reinsurers, and partners, covering 20 different topics in specialty insurance. One of our values is Mavericks of Progress. And this means because we're family-owned and independent, we can be a little bit more entrepreneurial and innovative. And we believe that the future of Africa belongs to those who are bold enough to challenge it. Now let me take a few minutes to tell you a bit more about this partnership. If you watch the news at the moment, I'm sure that you will agree that we're living in a crazy world. The truth is that this is the most normal the world will probably ever be. If you look at the top left of that screen, Middle East conflict, still unresolved. This is going to have a global impact. And sorry, this slide depicts a number of the global risks facing the world. And of course, these will have an impact in Africa. Middle East conflict, which is still unresolved. And of course, it's going to have an impact here in Africa on inflation, currency fluctuations, changing trade relationships, and of course, putting further strain on our own nuanced geopolitics here in Africa. That flash of light in the top is not a cloud with a silver lining. That is actually a lightning bolt that represents the fast-changing pace of technology that we're facing around us today. And this is both a risk and an opportunity for us in Africa. In 2024, there were over 131 million cyber attacks, attempted cyber attacks across Africa. And yet 90% of African countries said that they need to up the game in cyber risk management. Artificial intelligence has the potential to be one of the most disruptive forces that our generation has ever seen. And this could be either a good or a bad thing. As I mentioned, I2 launched Africa's first AI insurance product. We're proud to be able to offer this to this partnership in Africa. This protects both companies or enterprises when AI gets it wrong and causes financial loss or harm. It also is designed to protect emerging AI developers and give them a form of an insurance guarantee so that they can secure opportunities with larger enterprises. Given all of this, the risks I've mentioned so far, it's quite surprising to me that if you look at the World Economic Forum Global Risks Report of 2025, the top 3 risks in the world are still related to climate change. And here presents yet another opportunity for Africa. Renewable energy is a huge opportunity for Africa, and here again, I2 brings expertise in renewable energy projects for wind, solar, and battery storage in an innovative new cradle-to-grave product. And this is backed up by over $500 million of capacity. A global trend in liability insurance is social inflation and nuclear verdicts. And this means that verdicts are becoming, particularly in the US and Europe, many verdicts are becoming almost uninsurable. This is not yet here, present in all African countries, but you can bet it's coming. I2 brings to this partnership a number of specialty insurance products and specialist liability, professional indemnity, directors and officers, and medical malpractice, all with the potential to be simplified and distributed digitally, and most importantly, relevant for Africa. A UN population study estimates that about 60% of Africa's population is under the age of 25. And here again, this represents both a challenge and an opportunity. What's fundamental to this partnership between I2 and Zep-Re is local skills transfer in new specialty insurance products, local employment, and the increasing of risk retention here in Africa. It's been quite an eye-opener for me to be here in Rwanda, I hope, and this amazing country that has seen many successes. And there are many success stories here in Africa, but there are also many different risks. So the question that I want to leave with you today is, how do we navigate all of these global risks that are impacting us here in Africa? And the answer is at the middle of that diagram. The answer is the I2 logo, the very heart of our DNA, the coming together of two people or companies to form a partnership. We like to say at I2 that 1 + 1 doesn't equal 2, it equals 11. We also say that at I2, behind every great thinker is a great risk partner too. And we believe these great thinkers and entrepreneurs are what are needed to move Africa forward. And let's together with Zep-Re be a great risk partner to many of these entrepreneurs and great thinkers. So to end off, Hope and your team at Zep-Re, we are very excited about this partnership, where, as Hope mentioned, I2 brings specialty insurance products, and Zep-Re brings distribution, a strong brand, and an incredible reputation on the African continent. Let's work together, and let's grow Africa's resilience. Thank you very much.
Thank you very much, Naila. And now what you're witnessing there is the signing. Good things are being born with those signatures. Thank you very much as the signing goes on. Thank you. Let's appreciate them. Wonderful. I would love to invite, now, could you please, MD and Naila, please remain on stage. I would love to invite Eunice and the rest of the officials from I2 and Zep-Re to join you for a group photo. Kindly. These are the people that spent nights sitting down, cooking, thinking, strategizing to bring us I2. Thank you. Thank you. Thank you very much. And that's the signing ceremony for the partnership between Zep-Re and I2. Next, we will witness another one of those great things, 3IF. And for 3IF, for us to know more about 3IF, I would love to invite on stage Benjamin Kamanga. Please let's appreciate Benjamin as he comes up.
Okay. To the Minister of Finance, Rwanda, and your delegation, who are also our hosts today, the Governor, National Bank of Rwanda, the shareholders of Zep-Re, the Board of Directors, Zep-Re, the insurance regulators of the region, the CEO and Chairman of insurance companies, our business partners, management and staff of Zep-Re, ladies and gentlemen, good afternoon. What we are meant to do now stands between you and lunch, and therefore I'm going to seek your intentions for just a few minutes so that we deliver this. So I will invite on stage Anthony and Mario, I think it's Anthony, to do just a quick presentation of what is 3IF. And then immediately after that, I will invite Kweku to take some 2 minutes to say one word. And after that, I will invite Anthony and MD Hope to sign. In those, we'll make sure that it's in a few minutes, which will not make your food cold. Just give us a few minutes. Anthony.
Good. Thank you very much, Benjamin, for the introduction. Anthony and I really appreciate the opportunity to present 3IF Ventures. That's the Inclusive Insurance Investment Fund. And at the end of the presentation, there will be an announcement. So what is it all about? You know, this investment fund, we start here with the insurance protection gap. This morning, we already talked a lot about it, so we are not going to go into much detail. But I think there's one number that really sticks out that was not mentioned yet, and that is that 90% of Africans currently don't have insurance, 90%. And that brings us down to the individuals, right? The Africans that currently don't have insurance. And we have discussed a lot about the enabling environment, right? The role of regulators, the insurance industry, the governments, the international organizations, all relevant. But let's turn quickly our focus on the individuals, right? And when we double click on the insurance protection gap, there are 3 things that stand out that prevent people, right, from accessing insurance. We call it the 3A challenge, and that's access, awareness, and affordability. Access is that currently the insurance industry is making a lot of effort, but the matter of fact is the insurance industry is not reaching currently the masses on the continent, right? So how do we make that happen? Second one is awareness. There's a lot of mistrust, misunderstanding, lack of financial knowledge about also insurance products and the benefit it can bring. So we also have to work on that. And the third point is affordability, because we have to move away from insurance products, right, that are paid on an annual basis where people cannot really afford it, right? It has to be brought down to an amount, a premium that is really affordable to people. And again, we see the insurance industry making big leaps, big steps to address that. But we are also seeing a lot of innovation happening from outside the insurance industry, currently coming to the insurance industry, which is a relatively new ecosystem, and those are the innovators, the startups, right, that try to make a difference. Oftentimes, they start really from the customer, client-centric product development. They bring in technology, they bring in AI to make a difference. On the list here, we have provided a couple of names of these innovators, and that's only a snapshot, right? The total universe of the insurtechs on the continent is much higher, and one of our partners, FSDA, they are currently supporting more than 150 insurance startups in Africa through the Bima Lab Accelerator program. Now, industry challenges are clear. They're on the left-hand side, right? So we are fighting with legacy systems. We need to introduce distribution at scale to make that business case for microinsurance also happen. We need product innovation. We need to be efficient to bring down the cost. And we have to create a customer journey that takes into consideration the everyday life situation of the low-income communities. So how to make that happen? was mentioned today many times, so I wouldn't go too much into details. We need public-private partnerships, right? We need the governments, we need the regulators to create the environment to make it happen. We need the insurance industry to mobilize the resources to invest a bit more. We need the startups, the innovators. And what's currently missing, and that's what we are trying to address, is the investment side of things. So we also need to bring capital into innovation. So that's what we are going to do with 3IF Ventures, and we are going to align it through different thematic focus areas, which is climate disaster resilience, an obvious one, agriculture, digital health, and also the SME sector. And there are great examples for each of those. So to go into details of the fund, I'm going to hand over to Anthony.
Thank you, Mario. Just to go to the next slide, just to show you how the fund's going to be structured, we're going to leverage catalytic capital, where we have the privilege to have FSD Africa coming as a junior investor in our capital stack, and Zep-Re coming as a senior investor in the fund. We hope that this will unlock private capital, because the aim of the fund is very much about attracting local private capital into this vehicle. On the side, at the bottom of this page, you will see a TA facility. We have been raising some money for a TA facility that's going to be provided to startups in the insurance ecosystem that are not yet investment ready, but that we believe have some potential. Then we will just disburse returnable grants to help them flesh out the insurance value proposition. And if they succeed, they may become eligible for equity investment in the fund. Now, the terms of the fund, I'm not going to go through all of the detail. This is a Mauritius-based domicile fund. We are targeting a final close at 30 million. We're going to do a first close in June, and that will be announced at the AIO in Egypt, with 12 million with our anchor partner, FSD and Zep-Re. The fund is a typical GP-LP structure with a 10 years duration and 2 years extension. Now, how can you engage with us? Because that's really a call for action. From the reinsurance and insurance industry, you will have access to a vehicle that will give you a Pan-African view of the innovation ecosystem. This is a Pan-African initiative. On the development partner side, you can come in as a catalytic or concessional capital, or from a first loss layer, but as well provide TA to support startups that are not yet investment ready. This will help unlock and de-risk the vehicle and attract more private capital. On the public sector side, I think regulator can engage to develop more agile framework to support the early stage and entrepreneurship. We have been mentioning Sandboxes initiative as well. Then that's the team. We will be very, very keen to engage with you. We are here today and tomorrow. Please reach out. Thank you very much.
Thank you, Anthony and Mario. Like they have said, they are available. We wished we had more time to give you the detail, but they will remain around if you want to engage with them and look for them. So I now want to give an opportunity to Kweku. Kweku is from the FSDA Africa Investment. He will introduce himself and just say one or two comments, because both FSDI Africa and ourselves, we are the anchor investors in 3IF.
Thank you. Our name has been mentioned twice, but I think I still need to give some context. So I represent FSD Africa. We are a UK development agency funded program based out of Nairobi. Our purpose is to make finance work for Africa's sustainable future. And we do this through two broad buckets. One is the FSD Africa umbrella that supports market development through policy, regulatory reform. I think an example was shared earlier about the work we were doing in micro insurance. And the other bucket is where I sit, which is FSD Africa Investments, where we bring to bear risk capital to support some of these initiatives that we are seeing in the market. I think we have 2 minutes, so I'll spend the time talking about the things I'm excited about for 3IF. I think, as the regulator from Zambia mentioned, you have all these great, fantastic startups that have these ideas, but are faced with some challenges. I think the main ones, one is capital. Initially, there was a VC excitement about insurtechs, but I think that lacked the depth and the nuance that was required for insurance specifically. And then the second one is what we call the tollgate issue, where even the ones that are being identified early are struggling to get that important capital at the inflection point that helps them go from concept to operational and then to scale. For us, our thesis has always been that early stage innovation has to be paired with intentional focused capital, 3IF being the vehicle for that long-term financing, with underwriting rigor, where we believe partnerships from people like Zep-Re and then other incumbents and market leaders would play a big role. For why we are excited about 3IF, I think the first one was that the fund has been set up to be an institutional grade platform. It's going to serve as a long-term aggregator for capital that can be funneled into these startups that are bringing up these wonderful concepts and innovative ideas. We are excited about the team, led by Anthony and Mario, who are former operators themselves, not just financial investors, and come with contextual knowledge of the market. Together, I think we've come up with a capital structure that is seeking to attract more people in industry, more of the operators to support and bring that partnership, the underwriting rigor, the risk pools, and the validation and the trust that is needed to back some of these innovative startups. I think finally, Mario and Anthony mentioned the technical assistance facility, so I will not go into that. But we are happy to be supporting the fund. That will be providing early and growth stage capital to these tech-enabled startups that would support in validating their business model, that would strengthen their operational rigor, and foster partnerships with incumbents and folks in the market to scale their operations and attract follow-on investments. I think finally, I would like to say we are happy to have embarked on this journey with Zep-Re. I think who are led by Hope. Hope's passion for innovation has been a threading theme through today's conversations. And we are looking forward to bringing this initiative to a successful first close in the coming weeks. Thank you.
So to finalize it, or to come to the top of it, like you have heard, 3IF work. And now that Lynette spoke about Zep-Re mandate, 3IF work is Zep-Re's mandate. 3IF work is our strategy of closing the protection gap. Therefore, on March 31st, 2026, our board approved a binding capital commitment of $5 million into 3IF and the execution of the agreements to effect that investment. So today, we would sign the pre-commitment to invest in 3IF as we move towards a final close, which the 3IF Ventures team has spoken about, which will happen at AIO in Cairo. So we are on our journey to that. So without much ado, so that we close, I'm going to invite Hope and Anthony to sit there to sign the certificate of commitment. Thank you.
Thank you very much. All right, Team 3IF for group photo. Kindly, Anthony and the MD will stay on stage. Join them for a photo. Benjamin, is there anyone else you want on the stage? Or all of your people are there? Zep-Re team. Thank you very much. Those are great signings we've witnessed this afternoon. The work begins. I2 and 3IF Ventures in partnership with Zep-Re. Thank you. Thank you so much. Thank you. Quick reminders before we break off for lunch. I'll make sure this doesn't take long. So lunch is served. So before we break off for lunch, I hope nobody else is coming to me with reminders. They're the ones to blame for the delay. So lunch is served at Soko Restaurant downstairs. The protocol team will hand us meal coupons as we exit the room. We've got Kigali excursions happening this afternoon. If you've not registered, please do so because that will still be ongoing during lunch. The gala dinner pickups will happen at your hotels. So different hotels at 5:30. 5:30 to bring you here at the Marriott, and it's from the Marriott that we will set off for Atelier, which is in Kichukiro. So dinner is starting at 6 p.m. We will be leaving the hotel at 6 p.m. The gala dinner is happening at Atelier in Kichukiro. Then tomorrow's AGM is at 4 Points by Sheraton. Please be there at 8 a.m. Now, before we bring it to a very, very good and official end, I would love to invite Sheila on stage because there's someone that she wants to pass a special appreciation to. Sheila, come.
Thank you, Jackie. I'll just correct her. My appreciation is to all of you. This wouldn't have been a successful event without your contribution, your questions, making the time to come and join us. Partners within Rwanda, partners outside Rwanda, insurers, the wider financial system, ecosystem. We're very honored that you could make the time to join us. This is not the end. This is day 2. We have more fun coming in this afternoon. Our panelists was fantastic, hearing different perspectives, and more importantly, the practical side of things. You know, converting disaster risk financing to something you can actually pick up and then implement very quickly. That was great. And my favorite topic, financial inclusion, that has grown on me over the years. I was really, really happy to see that coming to life. So I thank you all. And last but not least, a very, very special thanks to Pichet Sayinzonga. Thank you so much. If you could join me. Thank you so much, so much. I think she can teach me insurance now. Don't you agree? She's done fantastic things and she continues to do them. Thank you for making the time. We appreciate you. Lunch is served. Thank you.
All right, and for a vote of thanks and a special invitation to the gala dinner tonight, I would love to invite our MD, Hope. Just in case my invitation did not reach home, I hope the MD's invitation will do the magic. It's this, and then we are off for lunch.
I also want to add my thanks to all of you for your patience. It's been a long, long morning. Pichet decided she didn't want to give us tea or break tea, but it worked. So thank you so, so much. We don't take this for granted, okay? I want to put my board's invitation for the dinner tonight. Please come. The reason I'm coming here today is that Rwanda can get a little distracted. You can get distracted, right? There are many good things, the restaurants, the walks, the bicycling. Please come for the gala dinner. And let's, let our hair down and celebrate, because the partnerships we have around this room are working for Africa. Thank you very much. And to our amazing MC, thank you so much. Thank you so much as well.
Thank you. All right, let's clap for ourselves for being a wonderful audience. Let's go out for lunch. It's been served at Soko Restaurant. We will have a beautiful evening. Don't get distracted. You've been warned. So see you at Atelier at 6 p.m. God bless you. Have a good afternoon. Bon appetit. The distraction.